Welcome to Generation Digital Workforce, the podcast that's here to explore the role of robotic process automation and other digital technologies. Whether you're just getting started or you're looking for advanced strategies and tactics, if you're curious about where human and digital workers are coming together to transform the future of work, then this podcast is for you. All right, let's get into the show.
Hello, everyone, and welcome to this week's Generation Digital Workforce. This is Zena, coming at you from Austin, Texas. This week, I have with me Bruce Mazza, VP of Alliance Partners here with Blue Prism, as well as Richard Olivieri from Latitude. How are you gentlemen doing today?
Good afternoon, Zena. How are you?
I'm doing well.
Doing great, Zena. Thank you for asking. Hope everything is cooling off there in Austin some point in the near future.
Oh, in the near future, that's the story of our life in August, but it's okay. Where are you gentlemen today? I believe you are on opposite sides of the country.
I'm in Colorado. It's beautiful August weather here in Colorado and Denver. And Richard, you're over in Florida, right?
I'm in South Florida, based in Miami, so pretty much any part of the country is opposite sides of the country for me.
Richard, tell us a little bit about yourself and Latitude.
Happy to. So I got my start in industrial engineering from the University of Puerto Rico and started my career at General Electric and Baxter Cardiovascular making multi-lumen catheters. So we've come a long way since then, but industrial engineering and process efficiency and optimization is near and dear to me. And over the past 7 or so years, I have migrated pretty intensely over to the process automation world and intelligent automation, specifically using robotic process automation, BPM, and advanced data extraction. I joined Latitude as the head of professional services and business solutions. And at Latitude, we are a pure play automation player. We focus very intensely on process automation. Blue Prism is one of our strongest partners, and we deliver services across a series of verticals: financial services, healthcare, banking, mortgage services, et cetera.
Great. And Bruce, welcome back to the program. We've had you before, so some listeners may be familiar, but would give us a little introduction to yourself and what you do here at Blue Prism.
Thanks again, Zena. Yes, I lead our Technology Alliance program globally at Blue Prism, which is such a fascinating part of the business. It's extending the power of automation with a huge number of technology players that are in the market and in our customers by connecting the digital workforce so that it can do more. And it's been a pleasure to be here. I just passed a 1-year anniversary at Blue Prism, and prior to that, spent the last 20 years inside unified communications, contact center, and also process management side across those industries. And it just have found that the opportunities with Blue Prism to help customers have been fantastic. So really glad to be here and talk to the audience about what's happening in the world of the CARES Act and loan forgiveness, loan automation, and mortgage forbearance, all solutions that we've partnered closely with Latitude to help get to market.
Yes, this is an exciting episode for me because this is a real world application of a digital workforce that is touching everyone right now. If it's not touching you directly, it is certainly touching somebody that you know. So the U.S. CARES Act was first rolled out about 4 months ago in reaction to the pandemic situation that we're in. But legislation continues to evolve and change. And I understand that even more changes are coming in September. So I'm really glad to have you guys here today to talk about that.
Yeah, there are a lot of things going on. And as we record this, it's August 3rd. In the coming weeks inside of Congress, there's a big debate going on about how to extend a second round SBA PPP program. So not just a second round of funding, but that's already occurred. And of the $659 billion that were allocated to help provide relief for small businesses, most of that money has been spent. However, there's still $130 billion left. And the deadline on the current SBA program for new loans for small businesses is coming up in the next 5 days, actually August 8th. So there'll be a last push where some small businesses can get that funding. And then as Congress considers all the economic challenges that are happening in our country right now, they'll be looking to likely extend that program into a different format, but one that focuses on continuing relief for the smaller of the small businesses and providing some way to get that loan forgiveness after they get the loans, because we know so many businesses are still affected, certainly in a lot of the states where there are increases in the pandemic and the coronavirus cases. Those businesses have had to shutter their doors again. The other thing that's happening is, interestingly enough, is for all of the loans that were issued, there were some 5,600 plus institutions that issued loans, and over 5 million loans that were made. Back in June, there were relaxations or changes to the forgiveness rules. And that's really critical to these automation solutions, because the lenders that provided the automation and the service for the loans to the end customers now need to adjust their rules of how they interact and calculate loan forgiveness for all those billions of dollars of loans that were out there. And that's great for the small business, but it also poses some challenges for those lenders, because they have to adapt to new rules, new regulations that came out in June.
Yes, absolutely. So that the first impact was really around processing loans, but now they need to move to really reacting to customer demands. How is the digital workforce enabling them to really make those fast shifts and leverage the agility that the digital workforce brings?
Yeah, that's a great, I'll use this example of the loan forgiveness, because again, after these loans have been issued and the applications are done and the money's been funneled to the small business, now the banks have to make these updates. And the updates to the loan forgiveness rules included, for example, originally having 8 weeks that a small business could use the funds, while the remaining eligibility for the loan forgiveness was calculated, and that now has been extended to 24 weeks. So the amount of time over which the banks will be dealing with these requests and their conversations with the small, medium businesses has increased substantially. Also, the loans originally, if they weren't forgiven, the bank had 2 years to process with the small business a payback with a 1% loan. And now that's been extended to 5 years. So again, the small businesses will continue to interact with those banks on those loans to deal with their percentage of forgiveness and any outstanding balance that they owe on interest. And also, there were specific rule changes. For example, the original loan forgiveness amount said that 75% of the money needed to be used for payroll. Now that's been lowered to 60% of the money could be used for payroll, and the other 40% now can be used for things like personal protective equipment. You think about many small businesses, restaurants have had to invest a lot of money in equipment and HVAC systems and cleaning systems and other things. Now they can use the loan for those amounts. So all those changes mean the lenders, every time there's a new new tweak on the rules for the program, they have to adjust how they interact with the small businesses. They have to answer lots and lots of questions and inquiries, and then they have to update their calculations so that they can manage these requests and stick to the rules and be compliant. And Richard, Latitude used Blue Prism as well as partners like Abby and Visagie to create a really strong end-to-end loan forgiveness solution. How does that work within the solution that Latitude's built for those lenders? What can they do with that flexibility?
Yeah, Bruce. Well, the combination of these technologies have been very advantageous for our different banking clients. First of all, we were able to build a solution in just about 14 days from scratch once the PPP requirements and regulations came out. Secondly, being able to provide enhancements to these platforms was extremely rapid as well, as we accommodated the calculation changes as well as the forgiveness percentages and allocations. So all in all, the combination of these technologies have represented and covered the full value stream from the point of time that a customer or a business is requesting a loan to the time they're requesting their forgiveness, the entire process is being orchestrated and facilitated with these technologies. And our customers so far are extremely happy with the amount of work that has been automated from their front end workers as well. And most importantly, just the accuracy and the compliance and audit capabilities of these solutions are second to none. A key advantage, again, of all these platforms has just been the fact that they're configurations as opposed to low-level coding to make these solutions work.
Yeah, I think it's kind of, think about the value propositions you just outlined. One was speed, the ability to move ultra fast to help these lenders set up the process in a matter of days, not weeks. And now the ability to be flexible and agile. And it is interesting to think if there is another approval for a second program for SBA, that means that all those banks, many of them have established new relationships with those customers. And the ones that have now established an automation solution from Blue Prism and Latitude will be in a great position because the groundwork is laid. They've got a lot of the client information and they can process even faster than they did before to help some of these same small businesses extend their relief and calculate again how much of that will be forgiven. But we shouldn't underestimate that, there are hundreds and thousands of requests. And the moment any new regulation gets approved, there'll be millions of calls coming at these lenders, millions of inquiries about what to do next and what it means. And for those lending institutions that did not create an automation solution, there's still time. And moving now before this next legislation will likely pass will be an important juncture for many lenders to take and make that automation leap. Richard, what about processing and activating those forbearance programs inside the lenders? I mean, if we kind of start on just the SBA side for small business, what else are banks facing for other types of CARES programs that they might be working with today that are causing them increase complexity and increase customers' inquiries that they have to work with?
Yeah, well, Bruce, the U.S. CARES Act is intended not only to support small businesses, but also to support homeowners and to ensure that those that have made the leap into homeownership can continue to enjoy the benefits that homeownership provides. So what the U.S. CARES Act has done is also provide a forbearance program. Forbearance is the ability to put a hold on mortgage payments for an extended period of time without incurring any sort of risks such as credit reporting risks or any other default risk like that. It consists of two key components. One is forbearance is offered by all GSEs, that being Fannie Mae, Freddie Mac, the VA, FHA. So these type of GSE or government-backed loans are all required to comply with forbearance. And that's over 50% of the mortgage population, by the way. To date, about 9% of all mortgages in the U.S. have already requested these forbearances, and the number is projected to go up to 12%. But with forbearance, what the program does is offer customers up to 180 days of a forbearance period to pause their payments. And should the need arise, they could request a second term of up to another 180 days for a total of 360 days of forbearance. As you can imagine, with 9 million forbearances currently active, in the month of April, we saw call volumes in various lending institutions spike between 300 and 500%, depending on who was interviewed. That's a significant jump, of course, on top of the fact that these financial institutions and mortgage servicers were already slammed with their own personal issues associated with working from home, et cetera. So when you combine these together, what you have is almost a perfect storm of bad or challenging customer service, extremely long wait times, customers falling through the cracks, and that's dangerous. So what we created is a solution that helps automate the activation of COVID forbearances. Again, by using a Blue Prism and IVR technology, we're able to provide two additional channels that customers previously did not have besides their call center. And it's a web portal and an interactive voice response mechanism that will guide a customer, prompting them to ensure that they qualify, that their loan qualifies for forbearance, that their personal situation qualifies for forbearance. And if it does, these solutions will then provide the customer with specific language that's required under these guidelines. And finally, just capture the final attestation from the customer that they indeed want to request this forbearance, select the terms that they like, that they feel are necessary for them. And our Blue Prism robots will process in the background the forbearance just like a normal agent would do. So this extreme volume of call requests is being handled in an automated fashion, almost a self-service fashion. And banks so far and mortgage servicers so far are extremely happy with this. The value proposition is clearly there, but most importantly, customers are getting the help that they need immediately within the same day, and servicers are able to focus on ensuring that they remain compliant with government requirements. Now, that doesn't end there. The first wave, of course, was in April. And as I mentioned, there's currently about 9% of all mortgages in the U.S. are in a forbearance, and that number is projected to go up to 12%. That translates to about 7 million mortgages. So if you recall, I did mention that the ability to request an extension on mortgages and on forbearances, And what that means is a second wave is coming, and that wave is projected to hit us late September and the October timeframe, where customers will again request an extension. Unfortunately, the pandemic does not seem to be easing, and our global economy does not seem to be easing. So we do forecast, as do many institutions, forecast a second wave of extensions. And there will be a third wave again in April as the second wave reaches its term. And this third wave will inevitably result in workouts, right? Loss mitigation workouts. And for that, we are also creating solutions to help automate and accelerate and facilitate for our customers and our customers workout solutions that best suit their individual needs.
What occurs to me as you're talking through that, Richard, and hearing how commercial lending institutions, retail lending institutions are going to be facing their own second waves, how the capabilities that have been assembled here with Blue Prism and some of the other technologies you mentioned, IVRs, chatbots, the BPM engine, the cognitive intelligence that Visaji and Abby offer, it really is a solution that can address the front end customer experience and the back end processing in the system, which is so important because any of these transactions will touch many back-end systems in most lending institutions. But ultimately, this is about providing a ultra-fast way for the customer experience, customer service centers, the lenders to have good customer experience and to truly help those small businesses and those homeowners. Can you just share what might be unique in this approach, given that Latitude's brought together a full solution for front and back office?
Well, what we're, instead of sharing my perspective, I'll just reiterate what we're hearing from our customers actually, and their senior level and chief officer type of roles. And one of the questions that they ask is, how do you get your system to talk to our mortgage servicing platform? And they're asking questions such as, how long does it take to develop these APIs and these integrations? And the answer is not long at all, because we're not creating any APIs or integrations. As a matter of fact, we're just using the system through the front end like we would with a regular mortgage servicing associate. So it's a very novel approach. They actually really appreciate that approach because it's more there's managed risk in terms of the type of information that can be accessed and controlled. And it's extremely quick. Some customers and some of our banking customers have created a preliminary solution to support their mortgagees with the web portal, but they didn't have a way to take that information and actually process it in real time in their mortgage servicing platforms. What they were doing was waiting at the end of a business day or at the end of 3 business days to run batch operations. So when they realized what our solution could do and what Blue Prism could do specifically in terms of near real time activating these forbearances, they were just floored by that capability. And it was certainly something that not only did they realize it could help them right now in the second wave that's coming and third wave, but they already have ideas of how to continue to expand this as we go forward. Another key feature of this tool, and I think that our mortgage partners would appreciate this, is the fact that it also captures RPC, right party contact information, which is so critical in the mortgage servicing world to help reach out to borrowers, especially in these times. So again, it's this ease of integration or ease of connectivity between our BPM solution as it connects to the customer and then as it connects to our backend systems is such a huge advantage for us and more importantly for mortgage servicers and borrowers alike.
And what do you think the impact is of this? You're working with so many clients that have used the loan automation solution, now we're looking at the forbearance solutions. What kind of impact do you think it's having on the workforce within those lending institutions?
Well, at a minimum, it's certainly reducing a significant amount of overtime in the workforce. They are extremely taxed right now, not only with the logistics of having to work from home and in a COVID type of environment, but just the sheer number of loan servicing changes that have had to happen in support of the U.S. CARES Act and just the economy in general has been overwhelming to many. So the workforce is highly appreciative, of course, of a more stable call volume that allows them to do their jobs with excellence. And from a banking perspective, they also realize that once this technology is in their doors and is already providing value not only to customers but also perceived value to employees, they're looking for new ways, such as originations with market rates as low as they are currently in the mortgage market and projected to go perhaps even lower before the end of this year. Originations is going to be a new wave of opportunity for mortgage servicers and lenders alike. And the advantages that this automated forbearance is bringing and demonstrating is similarly demonstrating advantages for originations and proactive workouts.
That's really interesting. It's kind of moving from this reactive stage in the first wave to now allowing banks to think ahead and be more proactive towards other ways to help their clients with the tool set. And those originations, of course, involve even more paperwork and more due diligence. And so leveraging some of the cognitive capabilities that we can integrate with to reduce risk and take out risk means that that part of the value proposition can be really extracted or used by the lenders at that time. That's really good.
Yeah. And it's also important to note that even though we are talking about forbearance and the U.S. CARES Act and COVID as a pandemic, mortgages and mortgage originations and servicing still remains a very competitive field. It's still a field that requires optimization. And if we needed any further proof of that, non-traditional lenders currently account for 37% of all mortgage originations, and that number is projected to grow. So what does that mean? That means that no longer does a mortgage originator require massive banking and financial systems to perform originations and underwriting and documentation and collateral. The use of intelligent automation and tools such as Blue Prism and orchestration with Bizaji, et cetera, have really changed this paradigm and to the tune of nearly half of the mortgage origination market is being done by non-traditional lenders, not bound by any geographic barriers. And they're all starting to see that. And it's a wonderful thing. And I mean this with all sincerity. It's a truly wonderful thing to be able to help homeowners. And it's a truly wonderful thing to create solutions that are helping small businesses. Nothing can give us more pride, I think, than that. And we're doing something great. But our economy needs to keep moving as well, right? So the only way we can keep moving is to remain competitive and highly competitive and cost effective, not only within our own domestic regions, but internationally as well. So I think these tools offer a tremendous advantage, not just to mortgage servicers, but just to industry in general in the United States.
That's really compelling. And it's kind of a great equalizer for a smaller lender, a medium-sized lender to be equipped with really powerful tools that can help them help their smallest clients. And this kind of more frictionless environment to help the money that's intended to get to the right audience move it quicker. And that kind of flow is substantial and should have a great impact. So it's really fascinating the work that you all have done at Latitude and together with the team at Blue Prism. It is a lot of challenge to come, but we can help in ways that will really ease the burden of this complicated, transactions and get down to the human issues, which is about helping those small businesses and those homeowners, like all of us, get back on their feet. One other thing I wanted to just ask you is, there's probably some other, considerations, even outside of forbearance and loan origination and applications that banks and lenders would use with this technology. Do you see other things, thinking about being proactive on the forefront, that lending institutions can consider as unique capabilities or parts of their investment profile and automation technology?
Absolutely. I personally have over 3 years of experience in mortgage servicing, where I was the VP of Operations Excellence for a private mortgage servicer. So I could personally attest to at least over 40 different areas within a business, 40 different processes that would benefit immensely from robotic process automation. And something that's really interesting, again, with the customers that we're talking to, is that the conversations typically start off with, what do you have that's ready-made that I can just plug into my system? And what's really interesting about the conversation isn't so much that they want something that's ready-made. It's that they want something that's very rapid to solve and to address their business need, and that has a clear technical, but also a very strategic value to them. And when it comes to speed to market, accuracy of development, compliance, and cost of servicing, there are really very few platforms that I could say that meet that bill as good as RPA does. So again, when they're asking for a ready-made solution, what they're looking for is a rapid solution, and that's the advantage that these platforms provide 99 times out of 100. There is no secret sauce, quite frankly, as much as many would like to think. There's still an application process for originations, product qualification, selection, underwriting, closing. The processes are the processes, right? There might be some calculation changes and nuances in there, but how it's all orchestrated and how data is entered and how we shorten these lead times to closing is really the differentiator when it comes to a customer. And on the servicing side, we're looking at high quality control when we're onboarding loans, making sure that servicing setup is quick and a customer does not miss any notifications that are required by CFPB requirements or et cetera. Loss mitigation, the same thing, creating these proof of claims and the financial registrations, that's very important, as is default management. So at the end of the day, while there might not be any global out-of-the-box solution, the creation of a point-specific solution or point-specific solutions that all are interconnected, all communicate amongst each other because they're residing on the same platform, and all are rapidly deployed, essentially becomes an out-of-the-box or a solution that is deployed just as fast as an out-of-the-box solution would be in the organizations.
That was really well said, Richard, and your experiences add so much credibility to that. The other thing I do wonder, I just kind of project forward, as these organizations, lending organizations now, especially when they're interacting with new customers. I mean, many of these small businesses were self-reliant before, and now they're having to come to the bank for money or new relationships with these lenders. So it's a point of engagement. It's a point of customer engagement. It's a point of understanding the small businesses and all the data that gets collected in those interactions, and providing that over time must be a real advantage for those lenders to have access to and understand their clients better. So, I would project that the smarter organizations that have leveraged their RPA plus backend systems and this orchestration will also be able to anticipate and be able to help those customers post the pandemic, and when life returns back to normal, but give them new options for funding, new options for servicing that they may never have had before, because they've got a good understanding of the behavior of the customer, the data that sits behind it, and can access it again for new workflows that could help their business. So that's all quite the positive outlook on such a challenging situation. Maybe a final question, just or a statement and a bit of a question back to you then after that, Zena, because you may have some more. But I think about the clients that we've been able to help just in the U.S. and there are others around the world that Blue Prism is servicing in a similar way with other government relief programs. What would you say is kind of the unifying value that your clients, Richard, have been able to capture from this? If you had to pick one or two words, what is it that they value most about automation solutions?
I think there are three things. Yeah, I'm sorry, but there are three things, and it's solid customer engagement first and foremost. I mean, customers, they have options, and it's very important to recognize that they have options. And even if you are servicing their loan, they still have options, right? Especially now with a low interest rate type of environment. So solid customer engagement is very important. And if their options weren't enough, customer complaints can be a significant regulatory type of issue. So having solid customer engagement is critical. These solutions allow that. Improving the workforce contribution. You have a limited resource pool of talented workers who understand the mortgage nuances, and mortgages do have a lot of nuances. So this workforce should be used specifically for those high value, high cognitive type of cases that deserve the attention, the human attention that they require. And by removing some of the mundane, highly repetitive tasks from this workforce, they actually can focus more on the customer again. They're also helping contribute more towards innovative solutions, even within the company, serving as a think tank, if you will. Lastly, of course, is compliance. Very, very robust compliance and an audit trail. So it goes without saying that every single transaction that's performed is recorded. It's locked down and it's completely auditable. So by providing, again, solid customer engagement, improved workforce contribution, and a robust compliance and audit trail, you have three key elements that will help that help a company do well. Now, obviously, what's key to that is rapid delivery of the solution, very high quality build, and it's got to be as defect free as possible, and it has to have a very strong UX, and it has to have a very strong ROI. And so to deliver those three things to a business, it's not an easy thing to do, but it's certainly very, very feasible with RPA solutions such as Blue Prism.
Thanks, great summary. And that's all the questions that I have, and great interactions. Thank you, Richard, and Zena, back to you.
Yeah, thanks, Bruce. I do just have one question because it was in the news not that long ago. I remember reading something about the U.S. government banning the use of software robots because of how fast they were. I'm curious, is there anything to that, or was that just sort of a thing I read at one point in time?
Great question. Zena, was right between the first and second round of funding, actually right after the second round of funding back in May for the PPP. What happened is a large number of applications were sitting at lenders. And when the second wave of funding, the $310 billion of funding, was released, those lenders immediately touched the SBA tool called ETRAN. And ETRAN is kind of the final step in the automation that a lender has to provide the required documentation to the Small Business Administration. And what was happening is that system was not necessarily designed for the volume that came at it, and both back-end transactions and then front-end web transactions. So many lenders that were using RPA technologies, including Blue Prism, did tax that website, and the SBA came the next day and said they would prefer that lenders don't use the web front-end or surface automation part of the solution. And thanks to the flexibility, we've been talking about that a lot on this call, the flexibility of the Blue Prism solution together with Latitude, we were able to pivot in 24 hours to a back-end upload of the data, which didn't tax the front end of the website, and that was done through an XML upload, which met the regulations and continue to provide the value to the lenders without hesitation. In fact, it actually sped the process even quicker to upload those automations. So again, it's a point about agility, and the SBA is since continued on with that system without additional challenges, and that's good. So a testament to the flexibility of the tools that we have and the team at Latitude.
So great that digital workers are, really on the forefront, helping citizens around the world deal with, the things that they have to deal with as a result of it. So, gentlemen, thank you very much for being on the show today. I really enjoyed the conversation.
Zena and Bruce, thank you very much for having me.
It was a pleasure, Zena, as always. And Richard, thank you for all your expertise and partnership.
And thank you, listeners, for joining us today for Generation Digital Workforce. Look forward to having you join us next week for our next episode.
You've been listening to Generation Digital Workforce. If you want to hear more about RPA, AI, and other cognitive technologies that are shaping the future of work, join us next time as we continue to go deeper on these topics with industry innovators and experts. To make sure you never miss a future episode, subscribe to the show in your favorite podcast player. And if you've liked what you heard today, please leave us a review. It's one of the best ways to help more people find valuable content. For show notes and more info, visit us at blueprism.com/podcast. Thank you so much for listening. Until next time.